Hello and welcome back to the Nothing But Net podcast, the podcast for triple net commercial real estate investing. I'm your host, Adam Carswell, joined as always by my co-host, Michael Flight. And we have a very, very special guest, to say the least, with us here today. I think this is a moment that's just been in the making, looking at my professional journey for about the past 5 years. Two people that have probably played, sorry, Mike, I'm going to monopolize the conversation here for a second, probably played the most influential roles in my life as a professional, as I mentioned, over the past 5 years. And that's Hunter Thompson, who was the original connector for myself and Michael Flight as well. So maybe we'll shed some more light on the story there, but honor to have them both here. And yeah, Michael, we've got the true capital raising gangster in the industry now with us here today. So what are your thoughts coming into this one?
My thoughts are that you have your two bosses on the line today, which are now have grown into kind of two partnerships. So, but I wanted to, I'm really excited about this because there's, so much that Hunter's actually changed my life a lot. And one of the things was, I'm going to tell this story. I first heard Hunter. I'd never heard of him before. I heard him on the Tom Woods show. And if anybody has never listened to the Tom Woods show, they should go and just put that on their playlist, because Tom has some really esoteric stuff, but there's a lot of economics and there's a lot of things that also run through some of Hunter's podcast. But at that time, I did not know there were real estate podcast. So I was only listening to other podcasts and not real estate podcasts. And so Hunter got me into this whole, wormhole of real estate podcasts. So I started listening, and I really just overwhelmed by the quality of guests that Hunter had on his podcast. So, and if anybody, I recommend highly going to the Cash Flow Connections podcast. And if I were you, I would also go to some of those earlier stuff. Some of them, most of them are evergreen, because he was talking to industry professionals, and they were, like I said, really high level professionals. They were not like your average, real estate podcast where you get somebody out there and he's interviewing 50,000 multifamily syndicators. So, or house flippers and stuff. Hunter has a fantastic podcast. The other thing that really, by coincidence or happenstance or an act of God, we just happened to both be on the same panel at Freedom Fest that first year that I heard about him. And Adam was out there working the booth for Hunter at Freedom Fest. So we met, we connected, and we've stayed in touch. And then Adam also reached out to me and said, I'm looking to learn how to underwrite shopping centers and things like that. So it was the beginning of a great partnership there. Now I can't get rid of them, even though I've tried. And then the other really cool thing is that we were one of the original sponsors and have tried to sponsor the Intelligent Investors Real Estate Conference every year. It's in California. It's one of the best real estate conferences for people that are looking to learn more about how to invest and how to passively invest and things like that. And just want to say his wife, Chrissy, is head of Dynamo Events, and the event always runs smoothly, perfectly, and is a kick-ass event. And I believe that has a lot to do with him letting his wife, Chrissy, do her thing. So with that, oh, and one more thing, and Hunter, you're going to have to chime in here. But Hunter is also a huge funnel hacker. And I think that Hunter and his organization, are you guys in the 2 comma club, 3 comma club, 5 comma club? Where are you guys at?
Well, first of all, thanks for the opportunity. And yeah, we've done some cool stuff. I actually have not opened up my 2 comma club yet, but we got an award basically, which is a word for marketing. And we have a program for capital raisers, which I know we're going to talk about today. And basically, if you find a good niche, if you position yourself, if you're patient, if you develop a brand and you consistently over deliver, and also are really willing to work very hard, you can create a business that will generate $1 million of revenue. And that's exactly what we did. And that's one of a couple businesses that we've been able to accomplish that. And we're just getting started. So, but the difference between, being able to, for a lot of people, I think to be successful as an entrepreneur, to make six figures as an entrepreneur, that's the goal of almost every entrepreneur. And then once you accomplish that, to be able to make seven figures as an entrepreneur is obviously the next thing. And very few people do that. But the next level, to make, eight figures as an entrepreneur is a very different skill set. So we're learning, what it takes to grow a company and build scalable systems and businesses and culture. And it's a really exciting thing. I'm just very, very lucky to be able to play the game at all. And I remember the first time I made $100,000 as an entrepreneur, and I thought I had made it. And now I realize that this is just there's an infinite, there's no ceiling. It's not like real estate. There's no comps. It doesn't matter what your competitors are doing or accomplishing. There's still Carl Icahn. There's still Elon Musk. So, and that doesn't mean that that's the ceiling either. So just a lot of fun.
Yeah.
Absolutely.
You don't even have to stay on the same planet.
That's exactly right.
All right, Adam, do you have anything to add to that? Because
absolutely.
Extended bio.
Two things that really stand out to me here, and again, I think why there's been such solid alignment between us three, me getting the opportunity to work with both of you and put together some phenomenal projects, is from a fundamental perspective, we all met at a, call it what you want, like basically a libertarian conference, a conference where people there kind of all see the world through the same lens. And so I think that's really served us having the camaraderie heading up into this point and moving forward. And we have a really cool team member over at ASIM Capital as well, Tyler Lyons, who's kind of in this worldview circle as us. And it's awesome to be able to just not feel like you have to keep your opinions quiet with the people that you're closest with. And then, the other thing too, I'll never forget, Hunter, this was probably Intelligent Investors Conference 2018, or around the time when I kind of made the decision that I'd be doing some work with Michael. And I let you know, and I'll never forget, you said, wow, that guy's really smart. And I just remember you saying that. And I'm like, okay, if Hunter thinks he's really smart, then this is a good move. So
he didn't know me at the time.
So, yeah, I would like to break the ice on this one, but kind of channel it through you, Michael, because we do have Hunter here on our triple net lease investing show. So, where do we begin in this world when it comes to raising money? And I guess what I'm saying is, could you please ask Hunter the ice?
Yeah, well, as Hunter brought up, and the main reason we're here is Hunter has trained all kinds of sponsors and syndicators how to raise capital. And he's also explained through his podcast to all kinds of investors how to actually kind of underwrite sponsors and how to look at sponsors and, what makes a good deal and what makes a bad deal. So first of all, I'd like to ask Hunter, is there somebody that you see that is the prototype capital raiser, or do you think anybody can do it?
Oh, well, it's a good question. So, I'll tell a personal story about kind of my thoughts on that. So I was mentored by someone who, one of my first mentors, Jeremy Roll, who's a very well-known passive investor and is a Wharton grad, probably got very good scores on the SATs and such. And so because of his background, especially when it comes to academia, I knew that he was someone that I wanted to be like, but I knew that I was never going to be as good as him or as smart as him when it comes to those types of things. And so, but I accepted that. He kills it. So if he kills it at 100% and I kill it at even 20% of what he's doing, then I was going to be happy. But something happened, in my career where I met another really powerful mentor. I'm not going to go into details of who that person is, but they have a very different skill set. And so when us three were hanging out, I recognized that while Jeremy was, Wharton grad, good SAT scores, had a background in corporate America, I was someone that no one would hire me. When I graduated college, I have no skills. I was not a good employee. The closest thing to a real job I ever worked was Cutco. And that was like my most formal job. That's like most people's like introduction to the workforce. And then this other person was like a very good public speaker, was very good at networking, had a lot of very high level contacts, and had a background as a professional athlete. And so I didn't actually think, okay, like I can be like him. I started to realize that in the world of entrepreneurship and business, everybody has a role in this world, in that realm, regardless of your background, your skill set, your natural inclinations. And so, I just doubled down on the things I love to do. And that's how I was able to find my place in this business. So a capital raiser is someone, like I said, to get to a certain level, all it takes is having good mentors, a playbook, and a blueprint for success, and the willingness to work. And that will get you to achieve that thing I talked about previously, which is making six figures as an entrepreneur, which is kind of the first.
Can we just stop right there? And can you repeat what you just said? Because I think that's the golden nugget, and you already just dropped it in, the first 10 minutes. So
sure. So the reality is, if you were to only listen to this podcast, and I'm going to go into some details as far as some cool success stories and things that I've accomplished and all that, it can be easy to check out because human beings, myself included, are looking for a reason why they can't accomplish things. So as an example, I've talked recently about a marathon that I ran, and it was my first marathon. I ran it in 3 hours and 10 minutes, which is a average mile time of 7 minutes and 15 seconds. I did it with 12 weeks of training. I was not really running prior to doing that. But, I have a background as a runner. When I was in high school, I ran competitively and was kind of on the verge of being a Division I, not exactly quite there, but, some schools I could have ran Division I. So when I tell that story,
I just want to point out that that's not a bad time.
It's not a bad time, but the
not a
reason
bad time at all
is that anyone that's listening to this, when they hear that I had a background as a runner, they go, well, okay, that's why you did that. And that's right. Right. But except for the fact that I worked my butt off for 6 to 7 days a week and ran with the coach and with the playbook and blah, blah, blah. So the point is, like, your natural inclination is to be like, well, that doesn't apply to me because, like, obviously Hunter had a background as a runner. And by the way, I tell that story to someone recently. I said, oh, my wife ran a 250 and qualified for the Olympic trials. It's like, well, yeah. So what do I do? Well, I go, oh yeah, well, what's her background? Well, obviously she's more gifted than me because that's why I couldn't do that. Because I do that, even about the exact same topic. So
I was just gonna, mention my friend, Sister Stephanie, who also qualified, and she runs a 257 or so.
And especially for a female, it's really, really competitive. So my point there is that we're
full-time nun.
Oh, that's awesome. It's just, we're looking for reasons. We're looking for excuses. We got to be open about that. But the truth is, like, everybody has skill sets and strengths. And if they double down on their strengths and they're willing to work and they focus that effort on something as scalable, potentially lucrative and exciting and potentially passive as capital raising, you can have success. You can.
Fantastic.
Absolutely.
Really good. I appreciate you going back over that, because I think that if people can just, and I'm one of those guys where, sometimes it's really hard for me to finish a podcast because I, keep repeating it and taking the notes. And so, but that's going to be worth it, especially the whole blueprint part. So how did you, once you started in this, once you got your mentors, how did you build up to that? Was the podcast something that really differentiated you from a lot of other people out there?
I'm sorry. I have to say one more thing about the running thing, because I just want to make this point very clear. So unless I misunderstood, there's just such an important takeaway to what just happened. So I mentioned, I ran a 310, and some people ask you, did you qualify for Boston? And no, because for me as a person that's 30, under 35, it's under 3 hours qualifies for Boston. But what I said is that I talked to someone that didn't qualify for Boston. They qualified for the Olympic trials. Okay. Mm-hmm. Olympic trials is like, you're running like 6:15s per mile. I actually just read a news story about someone's sister that I used to run with in high school that got 20th at the Olympic trials and ran it in like 5:50s. I think she ran a 2:33 marathon. So the reason I'm saying this is that everybody at different levels, there's always someone that's like on some other level. Even when you get to the Olympics, you're like, oh, we only set one world record. You only had it for 1 year as opposed to 10 years, like these types of things. But all of this stuff is irrelevant when it comes to entrepreneurship, because the natural genetics that are associated with running are not applicable in any way. So whatever you have, it doesn't mean in running, if you only have like one lung, for example, you're going to be at a disadvantage. At entrepreneurship, we just had someone speak at our mastermind that has one arm, half of an arm, basically, no legs, and has accomplished some incredible things. And now, because of like the fact that he was born with some physical challenges, he's now like going to get paid 6 figures to speak, multiple times per month. And he's absolutely crushing it. That's the nature of entrepreneurship. You take your weaknesses and turn them into strengths. So as far as your answer to your question, we just did a deal where we raised $10 million in about 45 days or something like that. And that is the result of a tremendous amount of work into what I refer to as the AENC system. Attract, educate, nurture, close. And we do this
AENC system.
That's right. We do this by building up a massive platform of attention, and we create automated systems that will take people from who is this person to, oh, of course he's trustworthy. Here's $300,000. And that's what I built my career doing. I can talk about more details, but that's what we do as a company.
Yeah, I think, and Michael, I do want to encourage you to definitely ask some questions similar to what you just did, because clearly that was awesome. That paid off. But one thing running through my mind right now, which one of Hunter's characteristics that really sets him apart from other people in this game, is he's done a really good job always taking a step back and identifying what are the trends right now and building like a system or a strategy around that. And that goes back to, and he kind of played himself down as like, my most formal job was Cutco. However you want to look at it. I mean, Hunter was very successful as an online poker player at a time where that was a trend, and he maximized that trend. He was also a successful DJ that capitalized on a moment where, as someone who loves electronic music, he was there at the forefront of that kind of coming to where it is now. And then he decided to get more sophisticated and moved over to commercial real estate investing, and really rinsed and repeated, whether it was conscious or unconscious, a similar model, which is identifying the trend and really capitalizing on it. So is that something?
I want to reiterate, let's go back to what you just said and what Hunter said, because what we're talking about here is he's got the AENC.
That's right. I've said it a lot, so I'm familiar.
Right, AENC, but it's a system. So what he did was he put together the system. So your system of attracting was the podcast, or was there other things that you were doing to attract investors?
So when it comes to kind of the attraction phase, I mean, what I want to do is basically get in front of the largest audience as possible so that I can take a lot of people through something, because almost all problems can be solved with top line in the sense of this, in terms of online marketing and stuff. So what I want to do is do interviews like this. We have a summit that's coming up. That's a good example of that. By the way, you can check it out at 100k2invest.com. It's a free summit, but you totally upgrade. That's an example. So multiple times per year, we will do what's referred to as a lead generation tool or a lead generation magnet for one of our avatars, our dream clients. The summit that we have is focused on passive investing. So
and what's the website on that again? So
it's the number.
We will have that in the show notes as well.
Yeah, it's the number 100 and then the letter K2invest.com. And if you look at it, you'll find that we're niching down to focus on our dream audience, because we don't care about just attracting anybody. And it's not exclusively about the number of people we can get to register. It's about the quality and the amount of buy-in that they have going through the process of buying. In this case, it's free, but I'll give you an example. If you have a summit called $100,000 to invest, a lot of people are going to go to that and say, I don't have $100,000 to invest. I need to move on with my life. But our minimum investments at ASIM Capital are typically $50,000 or $100,000. So those people we want to attract. And if I create a summit called how to make $5,000 in real estate, we may get a lot more registrants, but it just won't be a good example of people that can invest in our deals. So the willingness to niche creates that opportunity for ultra high buy-in. I'll give you another example really quickly, because this is a really important to set the stage for what's going to come in a second. If you created an ebook, for example, which is like 7 reasons triple net is the place to be for the next 7 years or something like that, there's going to be a lot of people that are like, but I didn't learn anything about wholesaling. Well, it's like, well, that wouldn't have helped you accomplish your goal. You know what I mean? So, but the people that are looking around for triple net investments, when they see that that's your main focus, the buy-in is so high, and we can go through what Oren Klaff refers to as this massive like emotional hurdle, which is, is this person trying to scam me, and get to what actually matters, the specifics of the deal more quickly.
Because what you're doing with your educational process is they see that you know what you're talking about, and you're also giving them, really good information. So even if they're not ready to invest at that point, they're learning something, and it's, going to be in the back of their mind, when they're ready to go.
Exactly. And so what we're trying to do is expedite the time it takes to take someone from never heard of you to eager to invest. And I feel like a lot of people make the mistake of saying, hey, I'm Michael Flight, give me $100 grand. Okay, give me $100 grand, give me $100 grand, give me $100 grand. And then they unsubscribe and you never hear from them again. So what we want to do is create something that's a little bit more like this. Hey, I'm Michael Flight. Thanks for entering my world. Here's some things that we've done. Maybe 24 hours later. Hey, here's the top 10 interviews that I've ever done on different topics where I'm the guest. Click around and take a look. Hey, here's a case study of a recent investor that's had success investing with us. Hey, here's a specific investment opportunity. It's not available now, but we closed it recently. If these are the types of deals that you're interested in, keep an eye out. Maybe 5 days later, new investment opportunity is available. There's 7 days to do the diligence and commit to invest, and then some scarcity around that, and then the opportunity is presented. And that will give you so much more results than just, running traffic to a $50,000 investment. If I have the opportunity to get their first name and email address, then I can walk them through that automated process, which will result in them giving me $50,000 or $100,000. And it's
I just need to stop you right here. So yeah. I need the people listening at home to realize that you just gave them like $5,000 worth of information for free. And that's not even like 5% of what they would get if they went to raisemasters.com or they went to one of your free webinars, which they could get a bunch of information, but you're just giving this information away for free because you've got like there's like, as you were talking about with your running thing, you've got, gas in the tank. I mean, there's like just a ton of extra stuff that, they're not going to get anywhere else. And I'm, not doing this. This is the type of thing I've always been impressed by, what Hunter has been able to do. And I keep going back to the podcast because that's how he reeled me in. But again, the differentiator was he had high level people. He wasn't going and talking about stuff and saying, you should know this. He brought in like experts in the field that were like, just spitting out all kinds of like beneficial information. So, let's get back to once you like reel them in, I shouldn't say reel them in because, it's you develop this relationship with them and they trust you and they know the key thing is that they know you actually know a little bit about what you're talking about or what you're trying to invest in. So if you've done a lot of multifamily, you've done a lot of self-storage, and you've done a lot of mobile home parks. Okay.
Yep.
How, with your fund, which you have like multiple different, types of asset classes that you're investing in, how do you gain credibility if you shifted gears and went into, let's say, a net lease property fund or a shopping center deal? Or even, dare I say, a Bitcoin mining fund?
I just have to say real quick, I had a classic Hunter Thompson moment when we were at Best Ever Conference recently. And along these lines, Michael, of shifting gears, Hunter said something along the lines of like, look, I could go raise money for a bowling alley tomorrow. and it would go well. And it goes back to the systems. And I was just like, man, I love that he just said that. But back to Michael's question. Yeah. How do you shift from different asset class to another one?
Well, so I'm a big proponent of kind of the division of labor, which is obviously fundamental to the laws of economics. And so I have positioned ASIM Capital in such a way that we can find strategic partners in other niches because I want to be diversified as an investor. So going back to this concept of division of labor, in order to have any market advantage, you have to be hyper specialized and hyper focused. The challenge, though, is that that is antithetic to financial planning or prudent financial planning, meaning that if my entire net worth is on the East Coast of Florida because of the demographics and the population growth and the blah, 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 and the standard of living and the lack of income tax, that's a very compelling thesis. And I may even succeed. But if I have my whole portfolio on the East Coast of Florida, well, about once a year, I'm going to be terrified for my life, right? Because of the hurricane risk. So I don't want to do that. And I don't want to build a business that encourages investors to invest a significant portion of their net worth when I know I must be specialized to be a custodian of their net worth. So what I did is I created a company that focused on a diversified approach where we would find strategic partners in their various niches, geographic locations, risk profiles, asset classes, et cetera, and then allocate capital to those partnerships with our investor base and be compensated by the partners themselves as opposed to the investors, which is kind of a win-win for our investor base, right? They're not coming out of pocket, but they can rely on our strategic partnerships, our due diligence process. I'm flying around the country looking at Bitcoin mining, for example, but I'm not an expert in Bitcoin mining. And I never try to present myself like that. I'm an expert in finding quality investment opportunities. And so that did allow for that flexibility. And, I don't know anyone that's in the bowling alley space, but I think it's an accurate point. If we found someone that had done 10 bowling alleys and produced 18% IRRs and now are looking to raise capital for their 11th, I think it's perfectly reasonable to think we could send that deal out and fund it.
I can hook you up with 2 bowling alley operators.
Okay, good.
But they didn't survive COVID that well. So, Bitcoin mining, I think, had a lot less downtime. So anyway, let's go back to, because I think we hit on a really good thing for somebody that might be doing, a specific thing, like let's say they're doing single family rentals or they're doing multifamily, and they wanted to move into a different asset class. What you just said is you look for high quality partners and then you do all the underwriting of that partner. And then you can, go to your investors with confidence that, hey, we've looked at these people and this is, so what's a little bit of the process of that in case somebody wanted to switch, like I say, from multifamily or something else and just diversify a little bit into, like, let's say net lease properties or Bitcoin mining?
Yeah, totally. So if you actually search my name and then search 7 stages of due diligence, there's a presentation I have that you can check it out. I was actually on a couple of podcasts to talk about this topic, but yeah, if you search 7 stages of due diligence or 7 steps that passive investors can use to sleep at night, any kind of thing like that. Actually, I see it here. Episode 361 of our show, which is the Cashflow Connections Real Estate Podcast, that presentation is there. And that just basically walks you through what we typically spend about 100 hours on as a company, conducting due diligence on different offerings we bring to our to our investor base. And I'd say that what I look for is, an inverse correlation with the overall economy, something that the demand for the product is inversely correlated or neutral in terms of, recessions, cash flow focused, 60 to 70% loan to value or unleveraged. You mentioned the Bitcoin mining fund, which is unleveraged. So there's no debt, and a sponsor that has usually $100 million or more under management. And that's kind of how we get your foot in the door. And then the conversation goes from there. But can I just do a quick little example of like
and that is, I just got to say, that's another free, at least $5,000 piece of content there. That, correct me if I'm wrong, Hunter, that was your keynote presentation from Intelligent Investors.
Yeah. And the stages of underwriting, we're going to have that in the show notes as well. So go ahead, Hunter, and proceed on. But I just want to make sure, because there's just a ton of information here. And so you're going to want to listen to this again and take some more notes.
Yeah, I'm hoping that people will. But basically, it walks you through the 7 stages, which are, going through the sponsor, going through the property manager, going through the market, the physical property, the legal documents, and the underwriting model. Not in that order, but it's pretty close to what I just outlined. And so what we're looking for is something that the return profile is predictable, because the predictability of outcome is one of the reasons why real estate is compelling. And so if you remove that predictability, you might as well be investing in something like, stocks or NFTs or something like that. So, self-storage is a great example of a recession-resistant play, because the worse the economy does, the more demand there is for the product. You think about people downsizing or having kids move home from college unexpectedly, which requires they, move things around, people changing jobs or getting fired. And like I said, going from a single family house to a 2-bedroom apartment. These are the divorces, which are common during recessions. Those types of things can really balance out your whole portfolio when everything is going crazy. So if you have a product that the cash flow is going to be relatively predictable, even if it's 20% of your portfolio, at least that 20% is spoken for. And so that view I've kind of taken to its rational conclusion, which I think somewhere between 80% of my net worth or 90% is tied into assets like that: mobile home parks, self-storage, multifamily apartments, which historically have done quite well during recessions.
And you thankfully don't listen to Adam when he starts talking about all his NFT stuff.
I haven't, but I've missed the boat, obviously.
I know it's very early. It's very early. But so this is the Nothing But Net podcast, the podcast for triple net commercial real estate investing. And I'm curious, Hunter, this is an asset class that, to my knowledge, at ASIM Capital, we really haven't gone this direction yet. I want to know from a high level, what are some of the benefits, pros and cons, really, when you're looking at something at triple net lease investments, just based on your knowledge base right now?
Yeah. So, I mean, in my perspective, I'm pretty asset class agnostic. What I care more about is who's driving the ship, and are they going to do the right thing when things go wrong? And so, I mean, Michael, we've had a great relationship for years, and I have a lot of faith in your organization. I feel like, we haven't figured out a specific deal to work on together, but if you're listening to this, I mean, in terms of integrity, Michael is of the highest of calibers, and that's what really, really matters. Because I've invested in many deals. Only one deal, which was a preferred equity deal, is the only one that's gone to pro forma. They've all been above or below or somewhere in between. And so we've been very fortunate so that overwhelmingly they've been above. But the point is, these are real properties with real people, and something goes wrong in every single one. And so it's, how does the sponsor act on behalf of investors? Now, in terms of triple net.
Well, and I need to stop you right there, because that is a key thing, because everybody goes to all these seminars and stuff like that. And, NOI grows to the moon, and everybody has a 40 IRR and all the rest of it. But the key thing that you just said is that something goes wrong on every deal. And I can guarantee you, I've been doing this, since 1986, and there's been real highs and real lows. And we've had, probably like 2 or 3 that, were just spectacular and didn't have anything go wrong. Every other one, whether it's you find environmental problems, you end up with, some sort of title cloud, everything. And so, when we're working with private equity groups, and they're like, well, why do we really want to invest with you? Our standard line is, we haven't had everything go wrong, but we've had enough go wrong that we're not going to panic in the situation. And number 2, we have connections all over the country that probably can help us get through this problem. So, I mean, that's exactly, I just want to hit on what Hunter just said. That's a big thing. And we've also been through 4 downturns now.
Yeah, for sure. And I'd say that the key that you focused on, we've had some great opportunities to work with some very well-positioned sponsors that have proprietary software, vertically integrated management company, massive economies of scale. I mean, there's a company we're working with right now that's basically going to buy a whole city. I mean, they've purchased $1 billion of real estate in 3 years. It's completely insane, all within a 40-mile radius. But all of that is irrelevant compared to how many friends you have. Because the friends you have is how you avoid when things go wrong. So like what you just mentioned, if you are out on your own printing money, that's cool. But what happens if you need to change lenders? What happens? That's a question that very few people ask. Who is the lender? What's your relationship with them? Do you know the principal of the bank or whatever institution it is? Can they figure it out? Do they know the asset class well enough to give you some flexibility if something goes sideways? Like those are really how deals are saved, not Excel models, right? So anyone can underwrite a deal, but it's what's going on between the lines that actually matters when it comes to protecting investor capital. So anyway, I think triple net leasing, the really compelling piece about this is the predictability of outcome. That's the main thing with triple net leasing. That's priced into the model, but the reality is if that's your number one goal, I don't see anything that comes close to that in the real estate space. And so, especially in today's economic environment where predictability is very difficult to achieve, I think that's probably the number one reason to contemplate triple net.
Bonds wrapped in real estate.
That's right. That's right.
And I just want to hit on that. There's another thing that, investors, and I don't know, I haven't had too many investors ask me this, but I have had a few. And you just hit a key thing there. It's relationship with lenders. So one of the things that an investor might want to ask is, if you saw something going wrong, do you have the relationship with your lenders, or have you done this before? Because I can tell you, when COVID started happening and we're in the shopping center business and these states and these cities started closing down tenants, we were on the phone immediately talking to our lenders and saying, hey, I don't know where this is going to go, but these tenants are closed, and so they might stop paying rent. So we, need to let you know about this in advance. And here's some of the things that we can work around, because in a lot of situations, your lender won't allow you to give a tenant a break. So because, so you need somebody that knows about that, and operators that, have dealt with that type of stuff, or have, can just at least answer the question if they don't have the experience.
I completely agree.
All right. So we'll go ahead and wind it down here. Got a couple more questions for you, Hunter. Always like to do the one thing type of approach here. So what would you say is the one thing that you're focused on right now at ASIM Capital to multiply the business throughout the remainder of this year?
Well, we, like, as you mentioned previously, a lot of my focus has been on our educational side of our business, because there was just such an opportunity. As an entrepreneur, you've got to be nimble. And if you have something that is just working really, really well, you should pour gasoline on the fire. And that's exactly what happened with Raise Masters. So just really quickly, basically, I wrote a book about the topic of raising money, which you can get. You should get it for free. You just pay for the shipping. It's raisingcapitalforrealestate.com. And that also is a lead nurture tool for a very expensive mastermind that we run. And
I just want everybody to know that the graphic for this thing is basically taken from the background of the book with Hunter's head on it. So,
that's a very cool
you'll
graphic.
See that and you'll know that you've got the right book.
That's right. So basically, that despite the fact that it's quite expensive, the skill that we're talking about is far more lucrative than it is expensive. So if we can teach people how to raise capital, they can get a massive return on their investment going through our program. And we've seen unbelievable success stories. We've seen people raise 1 million, 5 million, 10 million, $25 million all within the last 12 months, which is really, really awesome. And just that excitement, we had to get that right. And we did get it right. And that's how we got a 2 Comma Club award, and we're just getting started. But at the same time, the thing I actually love is placing capital, getting money out of the stock market, helping people get some predictability in their portfolio. And so now we're trying to, and are pouring gasoline on the other side of the business, which is, the foundation is there, so I spent the last 10 years developing relationships, processes. I've invested millions of dollars in real estate. And now it's time to scale to the next level. So that's the thing that we're focused on right now.
Yeah.
So he's going to be a 4 comma club, assets under management.
It's a lot easier in real estate than there is in masterminds to get to 9 figures, but yeah, we're on our way.
All right. And so there's one big call to action coming your way here, ladies and gentlemen. But before that, I have to ask everyone here on the call, are we all going to be neighbors in Miami, Florida one day?
I hope not. And I not say that because if we live in California, which is why Michael always makes fun of me. But
in Chicago, so yeah.
Okay. So I have a really good setup here with my friends that I grew up with in high school, which is weird because I'm from Memphis. So some of my best friends, like the 5 of my 10 closest friends that I grew up with, live in California. And so I would not leave here unless it was under duress. And I have been under duress recently through the COVID stuff. But if that happens, I would be very happy to move to Miami. And
there's a few break up the bloodline jokes from Tennessee in there, but we'll just skip over that.
Right. Basically that level of closeness.
And I had to ask that because Michael, I know you've expressed your interest in Florida to me as well in the past.
I have, and I've got, family that, keeps me here in Illinois, unfortunately. And one of the things I would probably settle, because I do like being in the middle of the country, and it's not, a 7 or 8 hour flight across the country and everything else. So if I did go someplace, it'd probably be in Texas. So, and if California wasn't so whacked, I mean, it literally is, heaven on earth for, temperature and beauty and all the rest of it. It's just, just put a few communists in charge and, see what happens to even a great place. So
that's right.
All right. So, Michael, there's something coming up that Hunter's got to share with us. And I think you might even be a guest speaker at this event. We'll go ahead and pass it over to Hunter to pump it up. But Michael, I think if I saw correctly, you are going to be speaking. So Hunter, what do we got coming up?
That's right. I mentioned it previously, the 100K to Invest Summit, which you can learn about at 100ktoinvest.com. And yes, the man himself, Michael Flight, is a speaker, and he talks about the future of the blockchain and how that really may impact real estate and potentially create some massive opportunity for liquidity and also some cap rate compression, which I'm really, really excited about.
Yeah. And the other thing, Hunter, I would like your opinion, because basically blockchain in security tokens are your standard, 506Cs or Reg A's or regulation crowdfunding, or you could do it with a 506B. Do you think that there's merit to this in the future, that you might get a little bit more liquidity, but additionally, you're changing from a paper share to a digital format?
Could you clarify the last part in terms of paper share versus digital?
Well, right now, if you're raising money in a syndication, it's a paper share, and you're kind of at the mercy of the sponsor's timetable, and you're kind of at the mercy that you can't necessarily get out of it. You can't borrow against it. Versus the digital shares. Do you see like something positive, or you just haven't looked into it enough to even comment on it yet?
Oh no, it's incredibly positive for sure. I mean, it's a no-brainer. I mean, first of all, the percentage of people that have any exposure to private real estate is like basically nothing. It's like 5% of accredited investors, something like that, meaning that there's 13 million accredited investors, only 5% or so have any exposure to the deals that I would do. That's insane.
I didn't even know that. That's
it's
incredible.
Something ridiculous like that.
Yeah.
So I mean, like 30% or 40% have significant exposure to real estate, but it's almost all REITs. You know what I mean?
Right.
So like it's like 90% of you in my network, but we're not normal people. Like that's just how we've built our careers. So most people that make $200,000 a year or have $1 million net worth did not have a lot of private placements. You know what I mean? It's something you can fact check me on that, but it's very, very small. And so it's much smaller than I think you and I would say would be advisable.
Right.
So
Right.
whatever we can do to take control away from Wall Street is I'm going to be a huge proponent of. Now, with access comes that responsibility. You need to know what you're doing, but I know that's exactly why we are doing the show right now. So I think it's going to be a massive, massive benefit, especially if the tradability of the asset increases, because it's a big challenge for a lot of investors if they're in a deal for 8 years or something like that. But if that were to be removed, I could see a lot of tailwinds to the industry.
Yeah, and I was even surprised. I was listening, and you know who Bob Murphy is. He's,
I do.
a world-renowned economist, but he was talking about the benefits of Bitcoin, and then he's comparing it, and he lumps real estate in with the stock market as really risky. And I'm like, here's a guy that's talking about infinite banking, and that's using life insurance companies. And what do life insurance companies invest in? Life insurance companies invest in mortgages, in equity real estate. So everybody should have some of their portfolio invested in cash flowing real estate, not necessarily just their major asset is their house.
Right. Yeah, completely agree. Or REITs, which I mean, Michael and I would not invest in. So it's like, there you go.
All right.
All
well,
right.
I think we're ready to close it down, Adam. So
Yes, we are. Yes, we are. So, on that note, Michael, I did want to just double check. Did you have any other questions or comments for Hunter?
No, we're going to have all of it in the show notes page. And the one thing that we learned here is if you're a guy like Hunter Thompson, or you're a guy like Adam Carswell, or you're a guy like me, you need multiple streams of income. So let's run down what Hunter's doing. He's got the ASIM Capital. He's got raisemasters.com. He's got the 100K, which is going to be a phenomenal educational event. And he's also got the Intelligent Investors Real Estate Conference. And I'm sure I've missed a few others, but let's just say that this is a man that he was talking about diversification. He's not only got diversification in real estate, he's got diversification of his entrepreneurial businesses.
Absolutely.
Great.
Absolutely. Hunter, any closing remarks from you?
No, I appreciate it. Thanks a lot, guys.
Yeah. All right. There you go, ladies and gentlemen. Remember, go to 100k2invest.com. That's 100k to invest.com. That's coming up May 18th through the 20th. Yes, May 18th through the 20th. And even if you're listening to the replay and you missed it, you could still go to that website. I'm sure there's going to be a way to get in.
There's one additional thing that they need to do is if they're looking for any information on net lease properties, they want to go to the libertyfund.io website, because we've got all kinds of articles there. We have all the I think we're up to about 30 nothing but net podcasts. And if you're looking to learn anything about net lease properties, it's there. And there's also coming up in September, the Blockchain Real Estate Summit. That's blockchainrealestatesummit.com.
That is very true and very accurate. So there you go. Plenty to dig into the show notes, to say the least. And again, I can't help but let my marketing bug get the best of me here. One more time, guys. Hunter's Summit, 100k to invest.com. Check that out right now. Thank you, Michael. Thank you, Hunter. And thank you, everyone who's tuned in. Thank you for investing your most valuable resource with us here today, your time. And we will catch you here on the next episode of the Nothing But Net podcast, the podcast for triple net commercial real estate investing. Thank you.